Level 1, the Scout. You don't have a title, you have a group chat. You're 23, you graduated from Stanford last year. You're working at a startup that probably won't exist in 18 months, but that's fine. You're not there for the startup. You're there for the ecosystem. Your job, your real job, is to know people. Founders, engineers, dropouts building something in a garage or a dorm room or a WeWork that smells like anxiety and Red Bull. Sequoia doesn't pay you a salary. They pay you a finder's fee. If, and only if, a founder you refer actually gets funded. Most don't. You send warm intros to a partner's email. Most go unanswered. You've sent 40 referrals in 6 months. 2 got a first meeting, neither got a term sheet. You keep sending. Because somewhere in this city, right now, someone is building the next Cisco, the next Google, the next WhatsApp. And if you find them before anyone else does, Sequoia will remember your name. That's the deal. You don't find deals for money. You find deals for access. Access is the only currency that converts to a career on Sand Hill Road. One morning, a founder you met at a Y Combinator demo day gets a call from a Sequoia partner. The partner mentions your name. You weren't in the room. You'll never be in the room at this level. But your name was. That's enough for now. Level 2, the Analyst. You're in the building. 2800 Sand Hill Road, Menlo Park. The office isn't what you expected. No marble, no glass towers, no mahogany. The conference rooms have cheap plastic wastebaskets. The partners don't sit in corner office. They work at stand-up desks in an open hall. The walls have those 98 framed IPO filings. Apple, Oracle, Cisco, Google, LinkedIn. The frames look like they came from a CVS. They did. You're 25. Your salary is $110,000. Maybe $120,000. It doesn't matter. Nobody here talks about salary. That's a banking thing, a Goldman thing. This isn't Goldman. You do research, market maps, competitive landscapes. You build the documents that help partners decide whether a company is worth a $5 million bet or a polite pass. You sit in on partner meetings. You don't speak unless someone asks you a direct question. Nobody asks you a direct question. You take notes. You listen. You hear partners debate whether a founder has what it takes. The debates are short, the decisions are fast. Sequoia hears over 200 pitches a month. The acceptance rate is roughly 1%. You start to understand what 1% looks like. It looks like obsession. It looks like a founder who knows their market the way a surgeon knows anatomy. Not from a textbook, from the operating table. It looks like someone who would build this company even if no one gave them $1. You also learn what rejection looks like here. Polite, fast, final. No, circle back in 6 months. The meetings start exactly on time. They end exactly on time. Nobody has their phone out. You break that rule once. You don't break it again. Level 3, the Associate. You're 28. Maybe you did 2 years at a startup that actually shipped product. Maybe you went to Stanford, GSB, maybe both. Doesn't matter how you got here. What matters is what you do now. You take the first meetings. You are the first face a founder sees when they walk into Sequoia. That means you are the filter. 200 pitches a month flow through. You hear most of them, pass on most of them. You write memos on the ones that make you lean forward. The memo is everything. 2 pages, clear thesis. Why this market? Why this founder? Why now? Why Sequoia? You present it at the Monday partner meeting. Partners ask questions designed to break the memo in half. Sometimes they do. You learn to write memos that don't break. You also learn something else. Best companies don't look like the best company. They look weird. They look too early. They look like a 21-year-old in sandals who hasn't showered. Don Valentine saw that. He funded Apple when no one else would. Sequoia funded WhatsApp when it had no revenue model. Sequoia funded Airbnb when sleeping in a stranger's apartment sounded clinically insane. Your job is to see what doesn't look right and ask, what if it is? That instinct can't be taught. It can only be trained. You are training it with every meeting, every memo, every pass, every mistake. The mistakes keep you up at night, not the ones you made, the ones you missed. Level 4, the Principal. You're 32. You've been at the firm long enough to know the rhythm, long enough to have championed a deal that worked, long enough to have championed one that didn't. Both matter. You lead deals now. You don't just write the memo, you own it. You sit across from founders and explain why Sequoia is different. Not because of the money, everyone has money. Because of what comes after the money. Operational help, go-to-market strategy, recruiting. The same playbook Don Valentine ran when he took Fairchild Semiconductor from a few million to $150 million in sales. Sequoia doesn't just write checks, it builds companies. That's the pitch. And it better be true because founders talk. You negotiate term sheets. You argue valuations. You fight for board seats. And sometimes, This is the part they don't put in the job description. You fight against your own partners. In the Monday meeting, you stand up for a company the room isn't sure about. You make the case. You spend your reputation. If you're right, nobody remembers. If you're wrong, everybody does. Doug Leone once walked into a meeting as a junior. Don Valentine left a note in green ink on the table for him to find. It read, "Doug, not fit to listen to founders." Left on the table, in the open. That was the feedback. No safe space. No follow-up meeting. Leone said that one note from Don was worth 20 feedback sessions. You don't get notes in green ink anymore, but the standard hasn't dropped. A senior partner pulls you aside after a meeting, tells you something Valentine used to say. We are not in the investment business. We are in the company building business. You think about that sentence for 3 days. You rearrange your entire approach around it. Level 5, the partner. You made partner. There are maybe 8 to 12 of you at any given time. Out of every ambitious MBA, every hungry analyst, every Stanford grad who dreamed of Sand Hill Road, you are here. You're 38. Your compensation isn't a salary anymore. It's carry. Your share of the profits from the fund's winners. In a good fund, that's tens of millions. In a great fund, a fund that backed WhatsApp or Stripe or DoorDash, it's hundreds of millions. Some of Sequoia's junior partners took pay cuts to join. Easy sacrifice. The capital gains dwarf the base. You sit on boards now. You are in the room when CEOs get hired and fired, when companies pivot or die, when a founder calls you at 11 p.m. because their co-founder just quit and they can't breathe. You take the call. You always take the call. Mike Moritz once wired Elon Musk $5 million after a 30-minute meeting. No signed paperwork, just a conversation and a wire transfer. That's the speed. That's the trust. That's the level. Your name appears on the Forbes Midas list. 9 Sequoia partners made the list in a single year. 9. Jim Getz topped it after backing WhatsApp. $60 million turned into over $3 billion when Facebook bought it for $19 billion. You care about the list for exactly one afternoon. Then you walk past the wall of 98 framed IPOs and remember what Doug Leone told the team. Take them all off the walls. Act as if we haven't had a single win. You stop caring about the list. You start caring about the next company, the one that hasn't walked through the door yet. Level 6. The managing partner. You run the firm now. You're 50. You've been at Sequoia for over 2 decades. You remember the dot-com crash. You were in the war room when the current fund was worth 30 cents on the dollar, when some partners owed more than their entire net worth back to the limited partners. The word for that is clawback. It means you pay back profits you already earned because the fund went underwater. Every other venture firm took the easy path, capitulated, ate the loss, raised a new fund, started collecting management fees again. Sequoia didn't. You didn't. You gave up all the fees, reinvested everything, got on planes, sat with founders whose companies were bleeding cash and helped them survive 1 quarter at a time. You turned a 0.3 times fund into nearly 2 times. That moment, not Google, not Cisco, not the WhatsApp exit, is the moment you bring up when new partners ask what Sequoia really is. Because it's easy to look elite when everything goes up. Question is, who you are when it doesn't. You lead international expansion, China, India, Southeast Asia. You restructure the entire fund into something the industry has never seen, an evergreen structure. No forced exits, no pressure to sell winners early. Because Sequoia sold Apple in 1979, before the IPO, for $6 million. Apple is now worth over $3 trillion. You don't make that mistake again. You build a structure that makes it impossible. Your net worth crosses into the billions. You still work at a stand-up desk. The wastebaskets are still plastic. Bill Gates once told a Sequoia partner he had the radio ripped out of his car dashboard. Why? Because if it was there, he might turn it on, and then he wouldn't be thinking about Microsoft. The culture doesn't update with the account balance. That is the point. Level 7. The Steward. This isn't a title. It's what's left when you stop climbing and become the reason the firm exists at all. Don Valentine never put his name on the door. He named it Sequoia, after the trees. Tallest living things on Earth, some over 2,000 years old. He chose the name because he wanted the firm to outlast him. It did. He was the son of a truck driver. His parents never finished school. He never went to Harvard. When Salomon Brothers told him they wouldn't invest with anyone who didn't go to Harvard Business School, he said, "Right, I went to Fairchild Semiconductor Business School." Salomon Brothers went bankrupt in 2008. Sequoia is still here. He turned a $3 million first fund into an institution whose portfolio companies are worth trillions. He hired people who didn't look like the usual candidates. A Welsh journalist who almost became an alcoholic at Time magazine. An 11-year-old Italian immigrant who got bullied for wearing slacks from Sears and watched McHale's Navy alone trying to learn English. Those two, Moritz and Leone, became the most successful venture capital partnership in history. Valentine passed away in October 2019. They called him one of a generation of leaders who forged Silicon Valley. He asked every person who ever sat across from him one question: what's important? And if you pause too long, if you gave the wrong answer, 30 seconds of silence, then 2 words. What else? That question is still being asked. Different partner, same room, same silence. Right now, somewhere in San Francisco, a 23-year-old is sitting in a coffee shop across from a founder who's building something that sounds impossible. She's taking notes. Tonight, she'll send a warm intro to a Sequoia partner's inbox. The partner probably won't respond, but if the founder is the real thing, if they have that obsession, that irrational clarity, that thing you can't fake, the partner will respond. And the founder will walk into 2800 Sand Hill Road, past the cheap frames, past the stand-up desks, past the plastic waste baskets, into a room where the answer to what's important decides everything. The frames on the wall will make room for one more. The firm doesn't stop. It just grows new rings.